The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, market days at 11 o'clock till noon. And of course, we've had some terrific programming up until now. Thank you, Tom. And Larry, and we've got the Dow up 193 points at 17,957. You've got the S&P up 1980, at 2009. You've got the Qs up, this is the comp index up 50 at 50.64. And this is going to be very interesting. You've got gold. Gold had earlier been up quite a lot. It's up 9 now at 11.87. So it's still holding very well. Silver is up 0.03 at 15.99, not doing as well as gold. Gold is really reflecting the pullback that we had in the dollar because the dollar is down 50 cents at 94.66. What is important is that you've got a copper rallying again to 274. Getting into that 275 area is kind of important. Crude oil is at 61.63. Nice rally. And I say to subscribers to my opening call that there's a chance that we see a rotation here as the biotechs take a breather, especially with that Regeneron making a peak F probably today. And bonds and other areas good, like the transports might have a bounce here. And you can see the financials doing well. In fact, the XLF is at this particular point up 34 cents at 25.04. So we've got that rotational correction aspect is very important. It is continuing to keep the level of the Dow that's really critical, and that's 17,600, but especially 17,500s. We keep getting very close to that 17,700 level and then having a bounce. And what you can see here, you can see it in the E-mini. Here's a left side, right side price time match in the E-mini, and it's going, the target is 2,099.75. High so far is 2,099.75 right there. Next target would be 2,102.75. So let's get rid of this, make it much smaller now because I want to show you some other things. And I'd like to keep that 120-minute chart in this little box right here. Here we go. The Dow INDU trading up at 17,957. This is a bigger move than I expected. I expected us to stall. If the best I was expecting was a 9-period moving average hit of 17,930. We've gone higher than that today. We've gone all the way to 17,960s. So it is a very good move. The stochastic has turned around. Remember, I was speaking about it yesterday that I was anticipating a rally. Why? Because we've gotten to the single-digit percentage move, about 7% or so in the daily stochastic, and that there should be a bounce. If the MACD was still looking very poor, but the 120-minute chart, you can see it right here, went to a G, and in fact, it's had a very strong, powerful move. The next big resistance is 18,031. 18,031 on the Dow. I don't know if we're going to get there. We'll talk about that in a moment because there are other things we need to look at. So the weekly chart is still at a peak E, and I suspect that we're really going to be making lower lows and lower highs in the weekly as well. At this particular point, we've got tremendous support in that whole area, the area that I've circled, and that takes us into the 17,600s. S&P. S&P is right here, SPX.X. Gone only to a trough C and broken decisively over the 9-period moving average intraday. That is at 2,097. We're at 2100.11, and that's a very nice move, 20-point move in the S&P. It just takes away 3 days of downside action. So what's really important is look how it's held the weekly chart, that inside track, the Chapman wave inside track, support, repellent, propellant should be zone, and it's doing that right now. But the MACD and stochastic are very poor. I suspect that we're going to be fading in the weekly chart of the S&P. Make it simple. A close in the 2064 to lower area would be very negative. A close above 2110 would say, hey, there's a lot more strength than you were anticipating, mister. Okay. Comp index. Let's go to the QQQ because that's what people track more than the comp index. QQQ had a nice, a powerful move today, hitting the 9-period moving average at 109.21. It's up $1.20. And there it is, that weekly chart, that 9-period moving average, which has just been a fantastic magnet and support level, holding right now. We'll see what happens by Thursday into Friday's close. Let's go on. We're looking at the IWM, which kind of broke out from the resistance it had. Leg E in the daily, counter trend move in the weekly, making almost like a V-shaped pattern. The stochastic and MACD are not that great in the weekly, but the daily is quite good. And the 120-minute chart suggests there's leg C, and there should be still higher highs to come. It doesn't say how much, but I'm suggesting that 120, that candle right there, 126.91, I'm not sure we're going to get there. I think 126.50 is going to be very strong resistance. Let's see how that works out. Even now, we're still trying to climb, and that is a positive on the market. So what I want you to do is to go to the VIX index. Yesterday, the VIX index was showing some strength, but it was in leg D. And what I'd say is peak D, we've got to be real careful how it pulls back. And lo and behold, BAP. It came all the way from the 1550 high. Let me type that in here. 1515. Sorry, 1550 I meant to say. And it's down to 1339. That's a huge move to the downside. That's a 7% decline. Man, I tell you, this is a tough one. And the weekly chart is once again just sitting there in a leg A that could be a failure. Oh my goodness, that's amazing. And the monthly chart, if you had to close below 13 this week, that would start to really impact the monthly chart. And the VIX index had a double peak D top here because the VIX index went to a peak D. So it was how we pulled back today in the VIX index that for me was going to be very important. Wow. A short squeeze right now. We're up 259 at 18,022. That's important. One of the reasons why I wanted to also be long as well as short for my subscribers is that the long positions seem to have some traction, and one is in the XLF, although we do have a put position on a bank stock, which is not doing all that great. But most importantly is that we've added another position, and that position is kind of a little independent of the market, and it seems to be holding up pretty nicely here. In fact, it's up 2% today, which means that we are probably up 2% because we got it just under the close yesterday. So it's a mixed market, and I'm trying to have a portfolio that represents a mixed market. We still have our short position, one of our short positions. We'll see what happens. It's just, you got to deal with the two positions, I'm sorry. Okay, so now let's go to, that's the VIX index. I gave you the parameters, and it means that by I don't know how we can get 250 points down from here in 1 or 2 days. So I'm suspecting that at worst, we will get some kind of a pullback later tomorrow, and then Friday could be bad news. And we'll see what happens after that. The XIV, which is the, this is the VIX index, it's called the VS inverse VIX short term, broke the flag pattern. First it broke the symmetric triangle to the downside. Now it's got a flag pattern that it's using as a benchmark right there. And it's kind of broken out of that. So what we're looking at is how does the VIX, the XIV, which is trading up $1.55 at 45.96, how does it handle that peak F/C right there at 46.64? Does it make a slightly higher D, then start to pull back, which will be E in the weekly chart? But the weekly chart of the VIX index, or the XIV, is actually very positive at 93%, and the MACD is still strong. Real interesting market, this, in the sense that there are so many different sectors, sorry, Get a little water. There you are, a little better. Frog in the throat. So what we're looking at is that the XIV is suggesting that there is weakness in the VIX index, there is strength in the inverted XIV, and we're going to see how it handles the high of 46.64. It's at 46.12 right now, and I'm going to go straight to Travis in St. Louis. Travis, how are you?
I'm fine. How are you?
I'm okay, thank you. Wow.
Let's talk about Sakai. I talked to you about this is kind of my newer speculative investment. I've been looking at it for quite a while, and I'm starting to accumulate. I started to accumulate some shares the last few weeks in it. Not what I want yet, as far as a full position, but somebody apparently likes it today, and yeah, I just wanted to kind of get your feel for this and see what you think about this thing. Kind of looking out now.
You know, this is a biotech stock. It is. How do you pronounce it? Tokai Pharmaceuticals? What?
Tokai Pharmaceuticals, yes.
Tokai Pharmaceuticals, or Pharma Inc. Excuse me. It's trading at 13.45, up $1.72 just today, up 14.5%. I looked at it the other day and I thought, hey, this is getting very interesting. Starting to form that rectangle base. But the thing about biotechs is that when the action happens, and as you've pointed out many times, you like to start your position, build your position, and then just sit back and say, I feel comfortable with the amount that I have, and if it's going to move, it's going to move so quickly that I won't have a chance to get in. I have to wait for the next pullback, and that's what you keep doing, and that's a great way to do it. So I know you don't have your full position, but it doesn't matter because this could still be very early in the life of this particular stock.
Yeah, I believe it is. Yeah, I mean, I've
what do they do again?
They got a prostate cancer drug that they're getting ready to enroll in phase 3.
Okay, and it's in phase 3 already.
No, they're getting ready to enroll it. We're just waiting on the enrollment, so it could be in the next 30 days or so.
Okay, so I'm going to type that in. So I actually know prostate phase 3. I'll just put in there. Okay. So this is very good because it had that huge spike to 30 after the IPO. It had that very sharp decline to just under 10. Retested it over the past 2 months, and then this month it's taken off, and that's a really good sign. Now, one of the things I'm looking at, and I'm going to make a big deal about it, is that I think that the latest stage biotechs, no, how can early, let me put it this way, the early stage biotechs that are now mature companies, I think they're going to have their pullback coming up right now. So let's look at this when we get back. We've got Travis in St. Louis, got a great stock, TKIA, up $1.61. Basil Chapman, Dow's up 253. We'll be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, we're back, folks. The Dow's up 240, S&P's up 24. Just really a short squeeze. Plus, I am getting the feeling that there's some new buying here in some of the areas that were showing strength over the last few days, and that probably will include the financials plus some short squeeze. Quick question, the Den, not a question, statement about Sears, SHLD, my favorite stock to short that I never short, because you could, the moment you short it, it has a big spike up for no reason at all. I'll talk about that in a moment. But we're on with Travis in St. Louis, and we're looking at TKAI, which is at $13.15, up for $1.42. So I did a little work on this. Number one, in the Chapman Wave methodology, I should have done this a little clearer right there. Let me do that. Let me do this here. I also double that check over there. So that's 58, and that is 59. Oh, it was a 59. All right. Gee, I thought there was an overlapping wave in the daily, but there's an overlapping wave in the weekly, in the 120 minutes. So we actually, this turns out to be, this is leg D. I thought at first it was an overlapping wave, which would say to me that not only is it in leg C right now, but it should still make a D. But being in D, let me show you something else that's very important right at this particular moment. So I'm not sure what if there is a story, or if it's just that what I was talking about last week is that the unknown, very low-priced biotechs, and I had one that we just missed in my opening call. We missed because I wanted to put it on as a trade, and I thought, oh, it's just it would be a fraction too high to buy right now. And then what it did was, if I can even remember what it is, Mankind, MANKD. You got to type it in the right place, and I'll show you. The reason why I want to show it to you is because in this particular sector right now, there it is, Mankind just went spiraling higher, and I wanted to get the breakout above peak C, and just didn't do it. And didn't pull the trigger, and it skyrocketed from the 570s or 80s all the way to the 740s. 732 actually was the high. Was that? No, 740 something was the high yesterday. 732 was the high. And now it's pulling back. And this fits exactly the same category, Mankind, Core, Biotech. I can't remember what they do, but it's one of the biotech companies. So what I wanted to show you here, which I thought was very important, is to point out that in this final phase of in this particular market move to the upside, I think that the higher capitalized biotechs, like the Biogens, like the Amgens, like the Regeneron, these are stocks that I think are going to have a tough time. They're going to have a tough time for the next maybe 2 months, 3 months, and see where they pull back to. Some might even make some kind of a hat trick top, which means that their monthlies have made a top of consequence. Now you've got price and time to the downside. That's my thinking. The technicals are saying, I really need to wait until this Friday, the close on Friday, to see where the IBB closes. It's showing some resiliency. It's up 263. It was up down earlier, but it got hit with the Regeneron thing. I should also mention that we are short from quite a bit higher up on the IBB, but that's not the point. The point is that it's still showing some kind of strength in a market like this, and that's important to see that money flows into it. So now let's go back to you, TKAI. So Tokai Pharma, and that what I'm looking at right now is I've drawn in the 120-minute chart, I've drawn in a rising channel with a base that's been hit 3 times, very nicely, perfectly in fact. And then a measured move from the 1230 price point at 1130 on the 29th, peak C. I'm using that. And what does it do? It intersects exactly here. Yesterday I was showing in the Chapman wave when I did Larry's show, I was showing the same type of thing where there was a Chapman wave inside wedge dashed line, and that became exactly the resistance. And here we're watching it bounce around this resistance because it's having a tough time holding above it. And that resistance on the 120-minute chart is 1322. The only reason why I want you to bring up the nitty-gritties of a very short-term 120 when you're looking at the longer term is I know that you want to add to this, right?
Correct. So and really what I'm doing, Basil, is I agree with you. Some of the biotechs that have had their days in the sun, like I've been a big advocate for Clovis for a while, and I've taken some of my money out of that one, and I've started to redeploy it into this one here because I think from a fundamental standpoint, it makes a lot more sense to be invested in Sakai than Clovis at these levels.
So I agree. In fact, I'd like to look at Clovis right now. What are we doing? For Tayo, we're doing fine. So Clovis had that big spike up to 102.28 and it's trading at 85.24. Hey, I think I'd like to spend a little time on this. Do you have a little moment here, Travis?
Yeah, I do. Yeah, I do.
We'll be back. Basil Chapman up, Dow's up 250, S&P's up 25.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Folks, so we're back. And now what we're looking at is the Tokai 120-minute chart. The next bar has turned first of all, the bar that we were looking at closed above that dashed line resistance. And the next bar has started, and that's going to be very important for me, because if this bar goes anywhere towards the 1287, it's turning around and saying, hey, the dashed line is now going to become a support level. But the stochastic's only at 54% in the 120-minute chart. The MACD is good, and the daily chart, I believe I'm calling it leg D for now. And that's suggesting with the MACD okay and the stochastic at 80%, suggesting, yes, there had to be news. So I think that you've got the rhythm, Travis, of these stocks down really well, and that you should use the rhythm of the stair-step move. This has got the same stair-step move that we've seen in some of the other stocks that biotech tend to have, like a U-shaped pattern where it spikes up, then it pulls back down very gently, forms a base, nothing happens, and before you know it, spikes up to a higher high, pulls a base, just like a stair-step move. So I'm going to suggest to you, you've got the patience to do that, but now your base is being raised. Instead of what I looked at this and I thought, hey, this could very well make another arch formation and come back to the 1150-11, especially if I was nervous about the other biotechs. Meantime, it's showing that the the smaller stocks, the kind of unknowns that are becoming more known now, are now in favor, because that's the way final tops are made in the sector, where they go from the very quality ones to the very less quality. This is quality only, and they don't have the same price performance. They don't have the same veracity. If you go into the details, they're more like looking like startups in many cases. And this is an IPO. So I'm going to suggest you can do one of two things. For your next position, you can either just nibble on a little bit right now at 1365, saying, hey, that's really not the price that I want. I just want to participate to see if it's going to get to 1398 or higher, which is a 200-period moving average in the daily, because once it starts its acceleration, it seems to continue at least for a couple of days. So that's one way to do it. Otherwise, just to be real patient and say, if this comes back to between 1270 and 1240, that's where I want to start the next position. But I'm also going to say to you, you've got to be a little careful in that when you get to the late stage, at some point, if the big cap biotechnology stocks start to pull back very sharply, it will impact the smaller ones. It's just the way it goes. But just right now, you're in this window that says, all right, I've got huge profits in my big caps. I'm going to put some of that money to work in the little babies. And this is kind of what they would be doing. So you've got yourself a window of about, I'd put it between 5 days and 3 weeks.
Perfect.
So I hope that helps you, but thank you for bringing it to our attention. And I just got information from Terry in the den saying Tokai Pharmaceuticals is a clinical stage biopharmaceutical company. Company is focused on developing therapies for treatment of prostate cancer and other hormonally driven diseases. Very important. In fact, my contention is that prostate cancer is the silent cancer, because all the money, not all, but a huge amount of money goes to breast cancer. And of course, it's really important, but really in many of the aspects of recovery, the debilitation that can occur, prostate cancer is far more debilitative than breast cancer. The difference is usually it's a much slower growing process. In fact, in elderly people, they don't even treat prostate cancer in many cases, because you've still got maybe 10 or 15 years to go, because it's slow moving. But if it starts to metastasize, then you have a real problem. So this is fantastic that this is coming up, and it's going on right through all the different spectrums in biopharma. It's just going to be an incredible age, except for the cost. There's a fantastic amount of cost involved, and there was a price of $50 billion just for 10 drugs, I think, coming up for the government under their benefits programs. That would be added to the costs already incurred. So, well, we'll be looking at that. Thank you so much for calling, Travis.
No problem. Have a great day.
You too. Thank you. Let's go to Jerry in the Back Bay. Jerry, how are you?
All right. How are you?
Good, thank you.
I just thought you might be interested in knowing that there's a phenomenon going on here, that the European markets have spiked, and the hedge traders on the floor say that they have rumors from Europe that Merkel, and it was announced that Merkel is holding a meeting with the Greeks tonight, and it's a surprise meeting. They weren't going to meet them, and now they've changed their mind, and say that Merkel has decided she wants a deal. And so the shorts are panicking, and this is like an event-driven rally.
Yes, does look like it.
Oversold. Yeah, so I thought you'd be interested in that.
Okay, well, thank you. I looked at that, and especially that big spike up, that 54-point spike that occurred when the Dow was sitting there at 199 plus 199, then bam, it just went up. So here are a couple of things that I want you to talk about. In a bear phase, spikes to the upside are vicious, highly volatile, and they extend a little further than one would expect. Sometimes, right. in this case, I would have expected 120 to 135. I had counted on 135 points to the upside. Instead, we just blew right through that. And this is exactly what happens. Now, the interesting thing is that the Dow Jones German stock proxy that I have went right to a leg E, making a trough E on the 200-period exponential moving average. It looks like there could be a rally. But the way I'm reading it based on the MACD and the stochastic of the weekly chart and the monthly chart sitting on the 9-period moving average, and the chart actually looks exactly like the DAX. I don't have the DAX for some reason. I just don't seem to get it. But this is the equivalent.
Today, yeah.
It looks to me like there could be a counter-trend rally, but that the tide in the weekly chart is still pointing to a 1-to-1. This is the lightning bolt 1-to-1 pattern, A to B equals C to D, that would target further lower prices coming up in June in the equivalent of the DAX in this Dow Jones German Stock Index. So yeah. And you know what? I know that you were looking negatively at crude oil. I've got crude oil still stuck in that same range, showing that there is some support. There's quite a lot of resistance, and it's just stuck in the range.
Yeah,
and I'm sticking with my stuck in the range theory for the moment. And then I think it starts to come down. So I just wanted to go back because I know that you were looking at the USO recently.
No, I appreciate that. Later in the month is a big deal. The Iran negotiations. If Iran comes back on, that's another 500,000 barrels a day quickly, and 1 million over the next year, and 30 million of inventory that Iran is holding that they can't sell. So that's going to be, a make or break thing. All righty. So I thought you'd be interested in that data. Yeah. Take care.
Yeah, so I think that would coincide with what I'm looking at, because it says that within the next 2 weeks we're going to get information that says the USO closing decisively, it's at 20.50, closing 10% higher at about 22.50. All of a sudden I've got something that says you can extend this bounce, I'm still calling it a bounce, a little longer. But I can only tell you this, that if it's down on a weekly basis, any weekly basis that the USO, the United States Oil Fund, closes under 18, I'd put it at 1875. That says, here comes that arch formation. So, good. Thank you so much for calling with that information, Jerry.
Thank you very much. I appreciate
my pleasure. Have a great day. Let's go to Robert in Chicago. Robert, how are you?
I'm very good, thanks, Basil. I was wondering if you could give me your view on Procter & Gamble here. What I mean by view, I'm thinking about a longer term, maybe a year view or 13-month, 14-month view on Procter & Gamble.
Okay, folks, we're looking at Procter & Gamble Health Products. This is a stock that many people have as part of what we would call a conservative portfolio. You're looking for dividends, although there was a period right up until the beginning of 2015 where Procter & Gamble was just stupendous. Now, there's a stock that I used to have. It was a perfect example of a double bottom where the price was exactly the same and there was a spike up. And I always put it into my charts. I wonder if I got it in my CD. I must check to see if it's in the CD. And I gave it as an example of when not to count that as a peak. The low bar cannot be the high bar except in an instant restart. And I had an A above it, and then I X'd it out. And that was Gillette. And then I believe Procter & Gamble took over Gillette. So what we're looking at here is Procter & Gamble Health Products. I've got to do something right now, Robert. While I'm thinking of it, I've been wanting to do it for about 3 weeks now, and I keep forgetting. I just wanted to get it out there. I believe that when you talk about the golden age and you talk about the different ages, this is going to be called the entrepreneurial age. So I just want to get that as a title. In 50, 60 years' time, when people look back, this will probably be called the entrepreneurial age. That's number one. So I've got that down. I can check it off. And the other thing that I want to talk about is the metric, the platform that the airlines use to a la carte every single thing. And now they're going with smaller carry-on bags. That is being, you can see it now in the auto industry. They're starting to do that. It is starting to filter everywhere. And that is going to be a hangover that stays with us for a really long time, regardless of where the market goes in the future. Now I can get to Procter & Gamble. Reason why I thought of it is when I was talking about Gillette, Gillette comes out with all these different blades. And sometimes there's not that much difference, and sometimes there's a very big difference. But their product is to commoditize, and that's kind of where the airlines really got it from, is to commoditize a product, and they'll give you the stick, but it's all the accoutrements that go with it that they keep wanting to sell. So Procter & Gamble now in health products kind of has used that up, because the competition, if you go to the supermarket, there is so much competition. It's like I talked about 3 years ago. I said, you can't get vanilla anything anymore. Everything's got a flavor, whether it's water, whether it's toothpaste, whatever it is, it's got a flavor. And they've even turned popcorn into flavored popcorn. Popcorn was just what you got at the cinema. Now there are flavors and all sorts of things. So Procter & Gamble, I think, is being victimized by they call it bastardized. Their own products are kind of working against them. This is the way I'm seeing it right now. And there's just so much competition with Tom's and all these so-called health products that the title itself, like Tom's, immediately you think of Whole Foods, right? So I think Procter & Gamble is in a different area now, and that's showing up in the chart. So what I'm going to make the suggestion to you now, if you're thinking of this as a core position, and you think of it as a core position that you want to buy and hold because of the dividend, I've spoken about this before. Stock that goes from 94, what was 93, 89, back in December of 2014, to the low of just 3 days ago of 77, 20 points. That's a 28, what is it, something like 28%. I don't want to see a 28% decline, but I'm only expecting to get 4 or 5% and have to pay a tax on that as dividend. So I'm going to make two suggestions. If you're holding it as a dividend stock, I would love to see it bounce from the 79.59 level it's at right now up into the 81 to 84 area, anywhere there. I'd be happy as a clam, because then I can turn around and I can say to people who are holding it as a dividend stock, now is the opportunity to lighten up on this particular stock, because the pattern itself says that there's a real good chance that over a period of 6 or 8 months, it's going to make a right shoulder formation at best in the 81 to 84 area. And then if it takes out at any point this year, 75.20, the low of October of 2013, Procter & Gamble is essentially done as a, I can't call it a cult stock, but really as a very long-term, for ages, it's been considered as a conservative dividend, good for your portfolio type stock. So I'm just saying, from the chart patterns that we're looking at, it's holding the 200-period moving average in the weekly chart. Now, what happens if it doesn't rally? In other words, I would not add to it now, because my thinking is I actually want to lighten up as it moves higher. I don't see another big V-shaped pattern that takes it to 87, another 10% higher. I do see the opportunity, if one was looking at a short, that if it was to bounce a little strongly, not a little strongly, quite strongly, 4 or 5% bounce, that to me would be an opportunity to lighten up. So that's the one scenario, but I'd like to give you the second scenario. And the second scenario says the whole area between 78.5 and 76.30 to maybe 75.75, that, because of the 200-period moving average in the weekly chart, that could become just a holding area as it's trying to form a base in the 200-period moving average to try to rally sharply. If that starts to fail, I'd be really careful, because 75.26 is very important low, left side support. Oh, we've got a break coming up. Can you hold on?
Yeah, sure.
Okay, I'll hold on, and then I have a couple of questions for you. So we'll be right back with Robert in Chicago. Dow's up 250, S&P's up 24. I'll be right back. This is the...
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Hi, folks. So we're back, and we're looking, and we've got Robert in Chicago. We're looking at Procter & Gamble. And I just had a quick question about Amber, which is Amberella. It's in lane E, making a doji candle. I drew in that rectangle. I think the upside is pretty limited from here to maybe 117. And if it takes out 109 support in the next 3 days, 103 to 102 would be the rectangle low, and then we'll have to see if it has another bounce from there. So a lot of these stocks are overbought. Didn't have a chance to look at the IBD stocks. Now, Robert dropped. I wanted to ask Robert the question of whether I'd answered the focus of his call, which was to be in Procter & Gamble because of the dividend. My thinking was it was because I remember him talking about it some time ago when we spoke about it. And my thinking here is you've got a stock like an Amber, which the fund managers are liking, and it's got a vertical move to the upside. Up got a stock, Procter & Gamble, which has got exactly the opposite. It's a vertical move to the downside, and straight line move up on the one, and straight line move down. Which one is being preferred? And you can see what's happening here. It's a bifurcated market, and the older stocks in the high techs had really great runs. Some of the IPOs have had a great run, and now the older stocks in the high techs are starting to rest, like Microsoft, etc. Now, what's important is that Procter & Gamble, I think, is typical of the stock in this category, the defensive type stock with a dividend. I'd just be real careful. And I want to just say to Robert, only if it breaks, if Procter & Gamble closes under 76 in the next 2-3 days, I would suggest lightening up a little bit, even though that could really be the buy area for a move up to 83, 84. Because he's talking dividends, I don't really want him to be suffering at a stock that's not being favored by the dividend crowd. That's all. So I treat 75, 74 as the area. You've got to just start being real careful, because if it can't rally from here to the 83s, that's not good. Okay, now, just a limited time. Question is, Chris asked about Amarillo. Okay, I got that. And then there was another question. What is this? John, hi Basil. You have a great show, and I subscribe to your newsletter. You have no positions. If you have no positions at this time, meaning him, would you? Would you think today is a good time to short the SPY or the QQQ or the diamonds, or would you wait a couple of days and see what happens? Thanks, Rob. So, Rob, this is what I'm going to do. I'm going to do in my newsletter tomorrow. I'm going to give you a scenario of what I think would be a good proxy for someone just like you, what you could be doing. So we'll do that. I want to see how we close. If we pull back by the end of the day, I want to see how the biotechs do by the end of the day. I want to see how the financials hold up, if they hold up. Whole lot of things going on for the close today. So we've got a great show coming up next. So in the meantime, and don't forget, you've got Steve Rhodes at 1 o'clock. You've got Daryl. You've got Dave White. You've got, what is today, Wednesday? Got Tom O'Brien back again. Hey, great programs. So stay tuned to TFNN. Now, let me just do this real quickly. I'm using the VIX as I always do. Volatility index has now come off the low. The low is down about 13. It's trading at 13.49. If by the end of the day, because it is peak D being made right now, you can't expect a sharp pullback. We've got that. How we go into Thursday, if Thursday you can see the VIX in a pullback in the general market instead of continuing the rally. I thought the rally would go till tomorrow at about noon, and then we start selling off Thursday afternoon into Friday. But if there's Greek news coming out, if Merkel's coming up with stuff, whatever it is, what is. I don't want to fight the market. I just don't like it. That's why we've got longs. That's why we've got shorts. I'll be looking at this to say bifurcated market. There are some very weak Dow stocks. There are some very strong Dow stocks. But mostly in the sectors that count right now, I want to see what stocks are acting well and what stocks we want to stay with or even add to the long side. So this is the time to do some housekeeping. Clean up the stuff you don't like and get some cash ready. And you might be wanting to do a whole bunch of things. So thanks for being here, folks. Stay tuned. Diagnostic Trading Hour coming up. Oh, it's Daryl Martin next. Great show. And I will be back tomorrow. Stay tuned.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.